I'm not going to be the first person to tell you that there's an electric vehicle bubble, and I'm not going to be the last person either. It's almost old news at this point. Tesla, NIO, Lordstown Motors, Nikola, Lucid, or CCIV, they're all names that you've probably heard, and surprisingly enough, for most of those, you've probably heard positives and negatives surrounding them. What I can guarantee that you have heard, however, is that by and large, EV stocks are very, very valuable right now, and most of this has all really developed over the last year. Some people are claiming that the space is undervalued, that it's the next big sector, that anyone who isn't throwing their life savings into this space is a dinosaur, but some are saying the opposite as well. Today, I'm going to do my best to explain exactly what's going on with all these major EV companies, put forward the arguments from both the bulls and the bears, and by the end of the video, hopefully you'll have learned or gained a new insight no matter what your opinion might be. But first, make sure to leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. So to kick us off, I thought it would make sense to give some background into this space, why EVs have taken off and where they might go in the future. So I'm sure now it won't come as a surprise that oil will run out. It's a finite resource, there's a limited amount of it in the world, and we are always getting the easiest stuff out the ground first, which means it's going to get more expensive to drill for oil as time goes on. This alone is actually enough to stimulate a move towards renewable energies, just a much slower pace than most people would like. Electricity is basically infinite. We're never going to run out of wind or solar or nuclear power, so the idea that we should be thinking far ahead into the future and using power sources that will always be around is not a difficult one to understand. Of course, the pace at which progress in that sphere is progressing is far lower than we would like to see. Climate change is very real, and again, that's a fact, not an opinion. The data is there, and while you might not be feeling hotter every summer, the world as a whole is getting hotter, and it is due to the huge amounts of greenhouse gases that we've been expelling into our atmosphere for centuries now. Obviously, this is a concern for many people, including pretty much every Western government. As a result of this, our countries have been trying to drive forward progress towards renewable energies, and a big part of that is phasing out fossil fuel powered cars and replacing them with electric. Governments all over the world are trying to encourage people and businesses to use electric vehicles, and they tend to do so with a mixture of taxes and subsidies. They tax dirty vehicles with gasoline or diesel, and they give out subsidies or basically pay you to buy electric vehicles which are supposedly greener and cleaner. This trend that has started of people shifting over to electric from combustion engines is probably not going to stop, and it's probably going to continue, and electric vehicle use is probably going to grow as well. A lot of people then, retail investors especially, like yourself or me, tend to think that on the whole, buying shares of an EV company is a good idea then. If that company is going to be selling more cars in the future, then it's probably going to be worth more in the future, and that means it's a good idea to buy it now. Retail investors also hear about deals made by governments or big companies like Amazon to buy and use a load of electric vehicles, so they make a snap decision to buy an EV company because they think that company will then go up in value. Retail buyers often buy and sell their stocks based on intuition, what they feel is going to happen. More often than not, they don't look into the balance sheets of the company they're considering, they don't look at the company's cash position or their debt obligations. If you're lucky, they might Google projected growth, but even then, their ability to actually understand what they're reading is fairly limited. And that's one of the reasons a lot of people think that right now we're in the mother of all bubbles. And I'm not talking about an index fund bubble or a tech bubble or even a fiat currency bubble or crypto bubble, but an EV bubble, where valuations have become disjointed from reality and almost everything seems to be based on hype. Now, to clarify, before you run down to the comment section and leave your angry comment, I'm not a Tesla short seller, I'm not a hater, and please don't claim that I'm spreading FUD, because everything I'm going to talk about in this video is based on what's happened in the past or data. I haven't even told you my position on Tesla yet, and I've hardly even mentioned the company by name, and I've also tried pretty hard to make sure that it isn't clear which company I'm actually talking about here when mentioning a bubble so far. So please watch the rest of the video, hear what I have to say, and then if you still have your complaints, leave a comment, call me an idiot, tell me to have fun staying poor, and be sure to leave a dislike that soon enough no one will be able to see. So where did this all start? Where did the hype come from? Well, this is where I'm going to surprise absolutely no one, but it came from Tesla and their monumental rise over the last few years, not only as a stock or an investment, but actually as a business as a whole. Now, if you're like me, you probably have some concerns about the state of our economies. With inflation at 6.2%, lots of investors are looking for non-market correlated assets, and that's where this video's sponsor, Masterworks.io and Fine Art comes in. Fine Art has proven to be a far better investment than you probably realize, returning 14% a year compared to the S&P 500's 9% a year since 1995. The only problem is that art starts to become a reliable investment once it passes the $1 million mark, and most people don't have millions of dollars to spend on a properly diversified art portfolio, but Masterworks.io fixes that problem. They buy incredible pieces of art ranging from $1 to $30 million by artists like Banksy and Picasso. They then securitize them with the SEC, allowing investors to buy shares on their site in an initial offering similar to an IPO. Once you've bought part of your favoured piece, you can then hold on to it until the piece is sold, at which point you can cash out, or you can sell your shares on the secondary market to someone else. Investors have already received a 32% annualized return in 2020 from their sale of Banksy's Mona Lisa. Masterworks.io is democratizing the art market and allowing the masses to invest in an asset class that was previously unavailable to us. So if that sounds interesting to you, if diversifying your investment portfolio is important to you, then make sure to check out Masterworks.io. There's a link down below in the description for you to check out. So what's the deal with EV companies and where did this hype come from? Well, of course it started with Tesla, who is basically the father to all these other companies. I don't need to give much background on the company because almost everyone knows the story, but in short, Elon Musk was wealthy after being one of the founders of PayPal, and he put some of his money into Tesla. He took control of the company and put it on track to become a real mass producer of vehicles. This started with the Model S, but then came the 3, the X, and the Y, and now there are a few other projects in the works as well, like the Cybertruck, the Semi, and the Roadster. They've grown a pretty huge amount, but I'm sure you've seen a bunch of infographics like this one, which show just how high the valuation for Tesla is. Now, luckily, a lot of the people who are very bullish on Tesla are here on YouTube, and they tend to be very open about why they're so bullish on Tesla. Obviously, I'm not going to be able to hit every aspect of the company or perfectly explain everyone's reasons for being bullish, but most of it comes down to these ideas. Tesla is growing very quickly, and they are probably only a few years away from being a real major producer of cars that makes millions of cars a year. They also have really strong margins on their cars, I think around 30% right now, which means they make far more money per car sold than most other manufacturers. They also have other potential streams of income like battery storage for electrical grids or solar panels like we've seen with SolarCity, or full self-driving car software. The company is likely to continue to grow into the future in terms of vehicles sold, but also revenues from the other sides of the business and overall profits. Now, my thoughts on all this is basically that Tesla is a brilliant business, but when talking about an investment, you need to take into account the price, and that's where it all falls apart for me. Tesla's PE ratio is ridiculously high, you've no doubt seen that. It's sitting at about 375 at the time of writing this video. That means that if the company remained as it is today and paid out 100% of its profits as dividends to the investors, it would take 375 years for you to make your investment back. Now, even for a super high growth tech company, that is a very high number. But again, the argument is that Tesla is going to continue to grow at a huge rate into the future, so it's justified. Now, one way people like to consider the future growth is to look at forward PE ratios, but again, Tesla is just too expensive on that front as well, at least in my opinion. Their forward PE, which means if you value the company according to what it's projecting to make in the future, is still sitting at about 170, which again, even for a high growth tech company, is really high. And this is where it just all gets a little bit too risky for my liking, because at this point, we're talking about what Tesla is going to do in the future. And while we all have our ideas, our projections, and our reasonings, no one knows what's going to happen, and Tesla's path to continued growth is not going to be an easy ride. The first thing to talk about are the subsidies present in pretty much every country at the moment for EVs. Basically, governments want people to drive electric, so they pay for some of the cars to make them a little bit cheaper and convince people to make the switch. But these subsidies aren't going to exist forever, and if there's a market downturn, a recession, there's a decent chance that these slightly unimportant government expenditures will be quickly gotten rid of. That's going to do a few things. It will either decrease the amount of people willing to buy EVs or Teslas, or it will force EVs and Teslas to lower their prices and make less money per car. There's also the other type of subsidy, which is sort of both a tax on internal combustion engine vehicles and a subsidy on EVs, and that is regulatory credits. Basically, the traditional car makers get hit with extra taxes on their polluting vehicles, but EVs get the opposite, a credit which they can use to sell to some other company or reduce their own tax burden. This program is also not going to last forever, and again, if there's a downturn, there's a decent chance it will be one of the first expenditures to go. There's the fact that, at least outside of the US, legacy car makers are not just ignoring Tesla anymore, but they're actually fighting back. In Norway, the most advanced EV market in the world, where 80% of all vehicle sales are now EVs, Volkswagen is now outselling Tesla over the last year. Other companies like Hyundai, Stellantis and Ford are selling decent amounts as well. A similar story is being told all over Europe, where Tesla is still fighting for the top spot with VW, and across certain months or places Tesla is winning, but they're not dominating the market like they were a couple years ago. In China, again, the story is very similar. Tesla is still either the largest seller of EVs or close to the top depending on which time period you're looking at, but it doesn't dominate the market like it used to. BYD and XPeng are two of the companies fighting with Tesla, and in China, they're doing very well. The point I'm trying to make here is that Tesla is priced like it's still absolutely dominating the EV market like it was a few years ago, but the only place where that's really the case is in the United States. Tesla is still a very strong brand, and I don't doubt at all that it's going to continue to grow its sales and revenues, but to justify its current price, let alone what it might well be worth in the future, it needs to be the most dominant brand in every market. Just being a top player isn't enough. Now, I know that there are some people who make points about battery storage on an absolutely massive scale for countries' electricity grids and the potential revenue that that could bring. There are also a load of other potential pipelines for Tesla to pursue in the future, like full self-driving. But they aren't here now, and if they are, then they're nowhere near as successful as they need to be to warrant Tesla's price. Full self-driving looks great, don't get me wrong, but it's only great in very specific circumstances, and in countries like the UK where I live, it's still pretty poor. And the biggest problem that Tesla's going to have with full self-driving isn't going to be getting the technology good enough, it's going to be convincing regulatory authorities that it's good enough. Now, if you're claiming that every government in the world is going to be spending 1% of their annual budget on Tesla's batteries, then there's really nothing I can say to argue against that, except that there is just no evidence to suggest that, and this isn't even speculation at this point, it's just pure gambling. For every car that Tesla sells, their market cap is about $1.2 million. For Ford, that number is $6,000, and for VW, it's $9,000 to give you some perspective. Each year, there are around 60 million cars built in the world. If every single car in the world were sold by Ford, their market cap would be $360 billion. If every single car in the world were sold by VW, their market cap would be $540 billion. And yet Tesla is worth $1.2 trillion or 1.1 depending on when you're watching this video. It's valued as though in the future it will be the only car company in existence, and even then it's still 2 or 3 times as valuable as it should be if that were the case. Now, while Tesla is a legitimate company, there have been a few high-profile frauds in the EV space, and this isn't too surviving. When you look at how valuable companies like Tesla and BYD have become, it's easy to see why others sought to copy their success. Now, there isn't much reason to believe that Lordstown Motors and Nikola set out to be frauds. Like a lot of companies that ended up going down this path, they wanted to be legitimate, they just weren't able to progress at the rate at which they had wanted to, and instead of changing the way they operate, maybe looking for new expertise or an unorthodox business plan, they chose to lie. Nikola is the more famous of the two companies, but they're strangely similar. Basically, they had claimed to be the next Tesla or NIO, the next brand new car company ready to disrupt the industry, to put the legacy car companies in their early graves with incredible, innovative EVs. Nikola went the Tesla Semi route and claimed that they had created a hydrogen fuel cell truck, and that within just a few years, it would be all over the world, and the company would be a roaring success. The problem was, the truck didn't exist. They simply rolled a truck that looked cool and futuristic down a hill and edited the video to make it look like it was driving. When news of this came out, the stock understandably tanked, but before that, the company was actually worth over $28 billion for a time, despite the fact it was nothing but hot air. It was literally all just marketing. Pretty pictures, videos of a truck rolling down a road. No sales, no profit, no production, nothing. And yet for some reason, investors all over the world, and not just retail, but real legitimate companies as well, pumped billions of dollars into this shell of a company. At its peak, Nikola was worth more than Ford, a company with a ridiculous brand presence all over the world that sells millions of cars every year and has done so for a century now. If this isn't the sign of a bubble, then I literally don't know what is. Investors are so desperate to get exposure to an industry which is actually far smaller than most people realize, to the point that they are willing to buy into a company with no regard for its fair market value, just because there's a chance this company could end up like Tesla and make everyone a millionaire. Frankly, it's absurd, but sadly, it seems that not many lessons were actually learnt from the fraud that is Nikola, as it has happened all over again, this time with Lordstown Motors. Now, I said the story is similar because it really is. A company with no sales, no revenues, no production base, and no real brand was once again valued at $6 billion, purely because investors thought it might be the next Tesla. The company, as with Nikola, found itself overpromising and underperforming, and once again, instead of thinking of a better plan, maybe identifying a new market or strategy, they resorted to lying. They lied about the number of pre-orders they had received and the demand for their vehicles in an attempt, albeit a successful one, to push the company's share price upwards. Of course, once news of this came out, the share price collapsed and the SEC started to investigate the company, but the fact that this happened twice is simply ridiculous. The fact that the levels of hype present in this market are so high that two absolute frauds have become some of the most valuable companies in the world within the space of a year of each other is almost implausible. It seems, at least from my point of view, that evidence of an EV bubble is starting to mount. And that brings us on to maybe the bubble of the past, the company that's been around for quite a long time as far as EV stocks come and go, and as of yet at least has avoided falling down the rabbit hole that is fraud. Lucid Motors went public via SPAC earlier in the year, and I'm sorry if you're getting a bit bored, but the story is one that I've basically already told. A company with zero revenue, zero sales, zero profit, zero productive capacity somehow managed to convince investors that it was such a good deal that they should inflate its already ridiculous valuation 500%. At which point it became one of the most valuable car companies in the world, but actually it became one of the most valuable companies in the world. It doesn't sell anything, it doesn't make anything either, and yet it's worth $90 billion. Now I know what some people are going to say. They're going to say that EVs are growing so fast that it's actually undervalued, that EVs are going to change the world we live in, and that I'm living in the past. But these people seem to have no concept of how difficult it is to run a normal business, let alone an auto manufacturer. This company has proven it can make a small amount of some pretty looking cars. It has not proven it can build a network to sell and maintain these cars. It has not proven that it can scale its production to the millions a year that it needs to justify its ridiculous valuation. It has not proven that it is going to be a major player in the future, that it has built a recognizable brand amongst normal people, or that it can even balance its books. Buying this stock is not investing, it's not even speculating, it is gambling, plain and simple. And the story with Rivian is almost identical. No sales, no revenue, no profits, it's all the same, you've heard it before. They went public a couple weeks ago and unsurprisingly, their share price shot up. They were valued at $120 billion. I think at the time of me recording this, they're valued at around $100 billion. Despite the fact they haven't done anything to justify that valuation, they haven't proven themselves to be an efficient business or a decent investment, but people are still flocking to give them their money. Rivian, I have to say, is probably peak EV bubble. I can't imagine it getting any bigger than this, but I've been wrong before and I wouldn't be surprised if I was wrong on this front again. The odds are stacked so strongly against companies like this. In my mind, there's a 99% chance that these companies are never actually able to justify their current valuations. People seem to be looking to Tesla as proof that these other car companies can make it, that they can also beat the legacy car makers and carve out a space for themselves within the market, but actually, I think the opposite is true. Tesla is a once-in-a-generation company. It was early, it was the first company in the world to mass produce a battery EV, to build a monstrous charging network across countless countries, to identify the niche that people wanted and produce a product that perfectly fit it. Tesla is like Apple, and no matter how many other startups made smartphones after the iPhone came out, they were all too late and none of them will ever get close to where Apple is, just like these EV companies will never get close to where Tesla is. When Tesla was founded, the odds were against it, but it got monstrously lucky and somehow survived. It was competing against $10 or $100 billion companies who had spent the last century buying each other up to increase their efficiency, and even then, they would often fail to make a profit. Tesla was ignored for years by these companies. It was allowed to develop and grow and build a niche for itself because everyone else was idle, but no one is idle anymore. The conditions needed for an EV startup to reach the point of profitability and financial security ended years ago, and it ended when the giants woke up to the success that Tesla would become. These companies with no revenues or sales that are somehow valued in the tens or even hundreds of billions of dollars will become case studies for out-of-control bubbles in the future. Now, to clarify my position here, I don't think that Tesla is fairly valued. It is overvalued in my mind by practically every metric you could possibly look at, but the company is solid. It is not on the brink of bankruptcy like it used to be. It is not struggling to make a name for itself. It is not finding itself unable to scale production quick enough to survive. Tesla is an incredible company, a brilliant business, but at $1.2 trillion, for me, it's an awful investment, and it is in the exact same bubble as the rest of the market. The only difference is that when that bubble pops, Lucid, Nikola, Lordstown and Rivian will find themselves struggling to survive, struggling to raise capital and hold off bankruptcy, whereas Tesla will not. Because Tesla isn't a startup anymore, it's a legacy. On one final note, it would be great if we could avoid the toxicity that so often comes with Tesla videos on YouTube. If you have your life savings in Tesla, guess what? I'm not shorting the company because I'm not stupid, and the efficient markets hypothesis has been utterly destroyed over the last couple years. And the fact that I don't think Tesla is a good investment shouldn't offend you. You own some shares, but you're not on the board of the company. It isn't your life's work, and you haven't dedicated your existence to improving battery technology. You're just a retail investor who happens to own shares in a company that I don't. Chill out, it's not that deep. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. Remember to check out the link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USD Coin, which is a far higher rate than you'll get from any savings account these days. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.